Hi, welcome to the Market Alert for Monday, the 4th of July 2022. Just before we get into the Market Alert, today is the US Independence Day. So the US markets will be closed, just to give you a heads up. So if it's quiet, that's the reason why. And if it's one direction to the upside, that's the second one, because that's generally the picture. Unless, of course, something kicks off in Europe and moves the market lower. Okay, so Friday finished off with growth concerns linger into the weekend after soft ISM, but stocks rally anyway. Of course they do. Bad news is good news, as we've seen. US manufacturing slumps in May, new orders and jobs contract, market moves higher. And also now the narrative is switching from inflation off recession on, stocks purged as bonds and the dollar surged, sending metals lower. Look at in just a moment. JPM warns US perilously close to recession as Atlanta Fed slashes Q2 GDP to minus 2.1%. Well, that's inevitable. And this one's an interesting one, considering they're hammering the metals at the moment. I'm a fan of gold's Seth Klarman supports prudent positioning as Goldman hikes precious metal target price. And these are the prices here. They should be way above this already. But because of the suppression of the price selling paper gold into the market, they are nowhere near it. So anyway, I thought I'd just throw that one in for the metals traders. Bit of hope there if it's coming from Goldman Sachs as opposed to Goldman. They seem to be the ones dictating the narrative as well, with recessions along with their fellow bedmates of JP Morgan. So news today, US closed, as I've already mentioned, and then we get into the rest of the week. Let's have a look for the high impact news items. If we've got the jolts out, then we've certainly got the FOMC. If we've got jolts and a non-farm, we've also got ADP, which is out as well. We've also got the FOMC meeting on Wednesday evening, 7 p.m. This is just a catch-up. This isn't any rate setting, which is why you're not seeing any forecast there for rates, unless there's a surprise announcement, which I very much doubt. And then on Friday, we've got average hourly earnings and, of course, the non-farm numbers. We'll look at those in more detail as we get into the week. But first, let's have a look at Friday's Dow and all of the other stock markets and see what happened during this trading session. So on Friday, the Dow managing to move up, but a weakness around initially, retested the low of Thursday, and we've seen an increase in volume there as well. So the market moving to the upside, but it's struggling at the moment with the 20-bar moving average in the daily chart. If we go to the 30-minute chart, you will see that we were moving up quite nicely. In the pre-market session with the European markets, we opened to a bit of a fanfare, and then the market was absolutely crushed all the way back down. And you can see from here to here, just eyeballing, that we've got an 89% retracement there in prices. The market then saw divergence in the stochastics as they were moving to the upside at this point, despite the fact that we had a bit of a move back, but still moving to the upside. And also within a whisker of the low there as well. You can see you've got the low of the trading session and also the low. I always like it to come back and test that low. But 89% will do. And we see the volume also increase. It's green and the market moving up and spending an hour at the 200 MA before breaking through, putting in a new high there, and then retracing overnight to the DP, which is fine. Oversold, as we can see here. We've got the volume in there, demand, crossover, and the market then putting in a small retracement and now trying to move to the upside. So it needs to hold above the DP if prices are to continue to the upside. Very important. Quiet day, market participant-wise, we'll just have to wait and see if the markets can continue to move to the upside whilst the US is closed. In the German DAX, we've got a bit of a different picture here, in the sense that we're not closed back above the 5-bar moving average yet. We see the increase in volume. We're still getting a lot of divergence as the market's trying to move higher. Very weak at the moment, and it will certainly need to take out this 78 and 89% retracement that has been drawn in on just this one bar because we didn't have any lows. You can actually redraw this now from this high to here on the upside. I'll just drag this out so that you can see those other numbers there. These are the important ones, but you'll see there's also a bit of a confluence there of fib retracements at the 5-bar moving average and the high of Friday's price bar as well. So watch this area for any move to the upside. As regards to the downside, well, you can't really draw anything in because there's no sort of new high being made. And the only thing you can do, which I do on occasions, is just click twice on the bottom of the 1 bar and you'll see the market's finding a bit of support at that 78% retracement there. So I'll wait and see what the market starts to do when it opens at 7 a.m. And if it starts to move to the downside, that's what I'll do. I'll just expand the chart out, make it bigger. But one thing you can do, of course, is go to the 30-minute chart and you can draw fibs till your heart's content as you pick out the small moves to the downside and vice versa to the upside. So again, if it was to replicate the daily chart there of that one single bar, that would be it, and I could see it a lot more clearly this way. In the 5-minute chart for Friday, the market was very quiet in the morning. See they're trading sideways, and then all of a sudden the market kicked off at 8:05. The futures were quiet. We had a move to the downside there, and then we moved to the upside and then became overbought, retracement, and then continued the move all the way through for the rest of the morning until around 11 a.m. before prices then started to reverse and make their way back. Spot the US Open. Well, that's here, of course, and you can see there the market spiking up and then following the US down. And it was a good day's trading there as well, which I will show you here. So for the remainder of the week, it was a good week, 2152, net of 1788. Profit factor of 5 to 1, 5, well, actually nearly 6 to 1 there. And then 68% profitable trades, 32 on the losing side. And for the whole of the duration of 19th of January to the current date of Friday, gross 34,782, net of just 20,000, and we're still at 54 to 46 ballpark for wins to losses, and 2 to 1 on the profit factor of average wins to average losses there. So let's get back to the charts, and overnight the German DAX, you can see there is coming off the 200 MA, oversold, got the volume there. It's an interesting pattern that's developing there, isn't it? But again, still pointing to the upside for the 7 a.m. open of the futures market. In the S&P, this too hasn't managed to close above the 5-bar moving average, but is certainly stronger than the DAX, which has taken out the low of the week before last. Trading down to the 62% retracement on Friday. We've seen some increase in volume here, and we're sideways at the moment. So let's have a look at the 30-minute chart, see what's going on. We're trading back to the DP here and trying to move to the upside. It'll need to take out the high, and en route it's got the close and the 200 MA and 20-bar moving average to also get and close above. Friday session, well, you can see how the 8 o'clock European markets affected the S&P. Nice bit of volume there. It was also showing divergence, meaning the momentum was moving to the upside already. We get a retracement there where we get a pullback to the 20-bar moving average. We only come back just to the oversold area. Then the market sits sideways until the Dow opens, and once again you can see the move up, move back, and then back up to the 200 MA, which has now become an obstruction for higher prices. In the FTSE for Friday, also looking fairly strong as well compared to the DAX, which is understandable because the Europe is screwed. They can't even raise rates by 0.25%, and they're bringing in their emergency buying of bonds on the same day as the QE ends. I mean, you just can't make this stuff up. But anyway, you can see there the S&P, sorry, the FTSE is sideways at the moment. It needs to close above the 5 and the 20 to move to the upside. And the upside targets, should the market move higher today, we're already through 38. We've got to take out 50, 62, 78 and 89, plus, like I say, the two averages there as well. So we'll save this. We'll have a look at the 30-minute. This too also moving sharply lower initially, trading down to the low. As I've said millions of times, the market doesn't like to take out the low if it can help it, particularly in the stock markets. And here we see a prime example of this as they bought in here, brought the market back, and the US Open there, another retracement back. Again, divergence. You've got a cluster of volume, and we've got divergence there as well as the momentum starts to shift, and they bring the market all the way back. Currently above the DP, the only one that is on the overnight. You can see there nice retracement as well as the market was oversold with some divergence and momentum moving to the upside. What you'll need to do here is to go to the recent high to here and watch the 89, which coincides with the high if you trade the FTSE, because that will be a crucial area. And in the currencies, we can see that the yen down on Friday certainly woke up, didn't it? And the market coming back on the overnight of Sunday night there, back above the 50-bar moving average in the daily as well. We're also seeing that we're oversold, so I would be inclined to draw this in just in case we get a move to the upside, so we can see where we're going to find any sort of fib resistance. And in the 30-minute chart, you can see the market falling out of bed there. Climatic volume, we'd already oversold, and we've got divergence there as the momentum started to shift. The market came back to where it had been trading in a sideways range, and overnight has dipped slightly, but is now back above the DP and Friday's close and the 50-bar moving average as well, and a good increase in volume there and momentum to the upside. So at the moment, looking good for the yen on the upside. I mean, that can all change, of course. Trading at 78% retracement there as well at the moment. So a bit of resistance that will need to be taken out before attacking the high to the left there. And meanwhile, in the pound, again, Friday, we're seeing the market move down to 89% retracement. Shakeout there, market sideways at the moment. We're oversold. And in the 30-minute chart, again, you can see that climatic volume there, massive volume. Despite the fact that it's red, you get that where the selling looks like it, the big red bar looks like it's selling, but inside of it, if you scale down to smaller time frames, you will find them actually buying. It's because it's a 30-minute chart, so it contains a lot more activity than a 1-minute or 5-minute chart. The momentum switched, moved to the upside, despite the fact that we had a bit of divergence on the upside, but the market failed to close below the 5-bar moving average until late on Friday evening. And overnight, the market has come back towards the DP and now starting to move to the upside. But of course, it's going to be affected by the US dollar, which will trade today. And finally, in the metals, let's start off with the monthly chart of the silver market. Let's just have a look at this. We got down to the 200 MA on Friday. We didn't quite get down to the order that I had at 1918. But if we have a look at the 30-minute chart, it will be a good idea. Let me just draw this on for you. So we've got a low here. That low is going to be 1939, which you can see there. So just 18-19 cents off that number that I wanted. But again, you can see that climatic volume there, and as it built and built and built. There may be a temporary bottom in here at the moment. The next slam is probably going to come with the next rate increase, but there is talk that the Fed won't get rates much above 3%. So that being the case, then the dollar will start to weaken and the metals will come into their own then. And certainly if they go back to QE as well, which I suspect they will by November, as something big's, I have a feeling that something big is in the pipeline with regards to all of this. and the midterm elections are in November as well. So that's where it's likely to kick off. And the metals to move higher, but until then they're going to remain sideways to lower and under a lot of pressure. Friday also saw gold have that slam down as well. They managed to bring it back above $1,800, which I've spoken of, and if they don't, then they could see this also getting crushed. But it's starting to build a pattern here where it's looking a lot stronger than most other markets. 30 minutes is interesting as well, not only on Friday where we saw the slam below the $1,800 level, which is this red line, but overnight we've had a spike up in silver and then moving back to the 200 MA, and it's actually holding at the moment as well. We'll see if it does, but at the moment, like I say, a bit of a change of heart on my part. It's starting to look fairly strongish, despite the fact that Friday was gave it an absolute hammering to the downside. But then that was to be expected, wasn't it? So I'm just going to draw in some fibs here just to see if the market's got any strength. Well, first off, it's got a fair bit to do to even get back to the 5-bar moving average, let alone anything else. So, like I say, first start is to see the market trade sideways and stop hammering it to the downside. That would be useful. And the dollar also, interestingly enough, is looking like it's going to have an attack to the upside today as well at the moment. So watch the recent high in the dollar at this level, 105.52. Just before we conclude, let's have a quick look at the gold-silver ratio. Big spike up on Friday, this holding, and you can see why, can't you? Because if we go back to just a quick look at the metals, silver has been in a massive hammering decline, and gold has held at that $1,800. So silver the weaker of the two. But the good news is when the market turns around, silver will actually outstrip gold in its recovery, as can be seen if we just go back to here when we got to 2022. Let me just switch this back to a we'll go try a weekly chart. There we go. Yeah, so in 2020 with the pandemic, we got the gold-silver ratio up to 125, and then you could see how it was absolutely crushed. Silver went from $13 to $30 during this period, and then you'll see how it's managed to move back since then, because they said, no, we don't want it above $30. Get it crushed, and you've seen them bring the gold-silver ratio back to this level because of what they've done in the silver market by crushing prices. Actually, I mean, it's incredible, isn't it? I mean, it's dropped by 33% from that high. Anyway, that will do it for this one. A lot covered here. Don't forget, it's Independence Day today. The market will choose its direction, but the past history, except that it didn't contain, obviously, the war with the Ukraine and Russia, but predominantly the market's moved higher because there's nobody wishing to sell into it. That doesn't mean to say that's going to be the case. Like I say, past performance it's not really cast in stone. So again, trade what you see and not what you think. So as ever, thanks for watching. See you in the next one.